The price of the S&P 500 has been falling lately. It recently broke a key support level, but will the price continue falling or is it due for a recovery? S&P 500 closed yesterday at $430. Pre-market at the moment is roughly the same, just a couple of cents higher. Price actually broke a key support, previous key support. The reason this is a key support is that the price actually made a rally and effectively broke the structure at this point and rallied all the way up to effectively making the new high. And that support actually held, effectively raising the price back up to $452. Even though the support raised the price up to $452, it wasn't enough to effectively make a new high and break the resistance at $457. So the bears actually took control, basically lowering this price all the way to breaking that support. And part of the reason why is to do with the dividends, the ex-dividends date. So what usually happens is in the run up to an ex-dividends date, you tend to see the price actually rise. That's because there's a group of investors that basically dividend investors that in the lead up to dividends, they buy a lot of shares, etc., so that they can effectively benefit from that dividend. And then this raises the price up because there's a lot more demand coming into the market and a lot more shares are being bought up of the ETF. And basically once the ex-dividend date, on the date or just after the date, you tend to see the price actually fall. I mean, you can see an example here on the date of the 15th of September, the price was rising up. And then from the 15th of September, the price started falling. And that's because that group of investors, dividend investors, they've basically capitalized on that dividend so they can just sell their shares. So they sell their shares and then this creates a lot of supply in the market and then this drives the price down or tends to drive the price down. So another example will be here in the lead up to this dividend, the price was rising and basically on the dividend date or just after, the price fell a little bit. Yesterday's close saw the price breaking the key support level again. I mean, over the last week, the trading price has roughly been around this support. So there's a lot of bullish and bearish fighting going on to basically gain dominance on the market and gain control to drive the price one way or the other. And this fighting has been happening a lot around this key support. So we'll see what happens with today's session. If the price closes below this key support, then chances are the price is going to head down to this temporary support level around $420. There's a chance that this temporary support might actually break and the price will continue heading down, effectively seeking the next support level. So before we have a look at where the price might potentially go to using the Fibonacci retracement lines, we'll just have a look to see what kind of news might affect basically the price or is currently affecting the price. And guys, bearing in mind that the S&P 500 tend to get affected by geopolitical news, all of that, and of course, with what's going on with, the war that's going on at the moment, there's a lot of unrest from a lot of people, investors. So people possibly pulling out of funds, etc., and putting the money possibly into gold and bonds and sort of seen as more safe. Stocks closed lower on heightened geopolitical risks and soaring bond yields. Stocks retreated Wednesday on the risk of an escalation in the Israeli-Hamas war after an explosion at a Gaza hospital complicated diplomatic efforts to contain the conflict. After the bombing, the leaders of Jordan, Egypt, and the Palestinian Authority cancelled their scheduled summits with President Biden on Wednesday. And also President Biden is planning on going to Israel, and there's a lot of mixed feelings about this, and people basically are feeling uneasy about it because they're basically he's going to put himself right behind enemy lines, right in the conflict zone, which of course the risk goes right up. So we'll just need to wait to see what happens. But in terms of the actual S&P 500, we'll just need to wait to see which way the price goes. But having a look at where the price could potentially go using the Fibonacci retracement lines, and as you can see, it's broken just below the 38 line. It effectively held or created a support around the 50% line, which is sort of expected. And that's that area that I was saying was a potential support. And this fits very nicely. So we'll wait to see if this 50% area actually holds, and if it does hold, then there's a good chance that the price is going to get back above that key support, reinstating that as a support line and potentially raising up to test the recent high at $457. If the 50% area doesn't hold, then the price is likely going to fall and test the 61% area, which again is another good area that a lot of people will be looking into. Looking at the Russell, the price made a double top in February and also July, and it's effectively just bouncing off this support level, key support level around $170. I mean, it came tested it again around March, tested again in May, and went all the way up, and now it's basically testing it around this area. So the more times the price actually tests the support or resistance zone, the more likely it's going to break that. So there's a big chance that the price is actually going to break this support level, and once it breaks it, then chances are the price is going to head all the way down to test the next one, which effectively was a double bottom. So we'll wait to see what happens with that one. But the levels to look out for at the moment is, of course, $171 at the moment, just to see if the price actually breaks that support, and if it does, the next level to look out for would be $162. Now looking at the MACD at the moment, just to see where the momentum lies, and there's a golden cross right now, but it's very sketchy, the golden cross. It came up and then it's bounced back, so we'll just wait to see if it establishes an actual good bullish momentum, and if it does, then chances are the price is going to head back up to effectively test this area, this zone, resistance zone between 188 and 191 dollars. So if the price heads up to test that 188 and 191 zone and doesn't break it, then it's likely going to just go into a range, basically bouncing between the support of 171 or $170 and 188, and just keep bouncing until it breaks either way. So guys, if you're invested in either SPY or the Russell, you just need to exercise patience. That's the thing with investing, you really just need to be patient, because you need to let the market tell you what it's doing, and then you just play along, position yourself in the best way that you can. So if you enjoyed this video, make sure you guys subscribe, and of course hit that notification bell so you don't miss any further uploads. I'll continue bringing out videos, analysis on SPY, let you guys know what's going on with the fund in terms of price action, mainly price action, and also looking at the Russell and potentially the Dow Jones, just to see basically what's happening with the overall markets. Give this video a like, it lets me know this is the kind of content that you enjoy seeing, and I'll continue bringing out content like this. And also comment below, let me know your thoughts on the video. Let me know if you're invested in either one of them, or what you're invested in, or if there's any stocks that you like me to do some analysis on. But I'm going to predominantly focus on SPY and the benchmarks, but I'll be happy to do some analysis for you guys if a number of you guys ask for it. So guys, get commenting, let me know, give me feedback. Thanks for watching, appreciate it, and I'll see you guys in the next one.